creative financing. This is where investing can get exciting. Top investors are using other people's money in these creative ways. Seller financing. Make the seller your bank. Why don't you have them finance the deal? You can probably negotiate better rates and better terms. They're not going to be as critical as a bank. They're not going to go through the in-depth evaluation like a bank is. So seller financing's a great opportunity. Joint ventures. Who's to say you have to make the payments? Find a joint venture partner who can profit from the deal. Let them make the payments. The interest won't matter to you because they're making the payments. If you buy the property right, you just work that into the deal. Lease options. If you work out a proper deal on a lease option, you can make that profitable. My first deal I ever did way back in the late 1980s, early 90s was a lease option. There's also assumable mortgages and subject to deals. A little warning here, though, on the last one on subject to. I know it's been a big thing for probably the last 5 or 6 years. There's some incredible coaches out there. I know them, and they're training people on how to do subject to deals. But I recommend that if you're going to do a subject to deal, you get an attorney involved to look it over. And here's why. Because many attorney generals are now looking and starting to intervene to determine if this could be illegal under some state laws, since subject to could be violating the acceleration clauses in a owner's contract. But I'll leave that to you and your real estate attorney to determine. But let's talk a little bit about the use of hard money. A misconception of many new investors is that hard money is for long-term financing. Hard money is a great option for acquiring great flip deals and co-living projects. But if you're in the market and you want to get into long-term hold, maybe assuming an existing loan will work for you. Some sellers have locked in rates at 3 or 4%. And some of those loans can be transferred to non-owner occupied buyers. Instead of taking a 7% or higher loan, you get their low rate. That can change the real estate investing game for some buyers immensely. All these creative deals take effort, and they also take education, right? Smart investors put the effort where most won't.